Hello traders, here's Jean-Pierre Mille from UTC. Welcome back to our YouTube channel. Today we are going to teach you a very important lesson, one of technical trading tools, which is very useful, which you will need in everyday trading. Without delaying, let's start after the intro. Welcome back to our YouTube channel. In our beginners lessons, we have given you free way of analyzing the market, fundamental analysis, technical analysis, and the sentimental analysis. And we have seen that any technical analysis, any way of you use it to analyze the market, you can make money. But we are going to focus on technical analysis because it is one of the best way to analyze the market because it is based on the price action. So today we are going to talk about the candlestick pattern, and before we continue, let's see what is a candlestick pattern. Candlestick pattern, it is only a visual representation of any price movement in a particular time. So the market moves ups and down, but at the end any trading session or the day or a week or a month, it goes up or down, and these visual representations of this price movement in a particular time is what we call candlestick pattern. Candlestick pattern or candlestick charts, as I said, they are the important technical tools that packs data for multiple time frames into a single price bar. That is what we call a candlestick pattern. It's all simply a candlestick chart. Now let's see the origin of candlestick patterns, even though it will not play an important role in your trading career, but it is good that you know these informations. The candlestick pattern has been developed by licensed traders, Japanese licensed traders called Munehisa Homa, around the 18th century. You see that candlestick pattern are not the current techniques. The candlestick is the technique which has been used many years ago. And they have been introduced to Western world by the American Steven Nielsen, where he wrote a book called The Japanese Candlestick Charting Techniques around 1991. And he is the one who refined the candlestick as you can see them today. So in briefly, this is the origin and the history of candlestick pattern, and you see that it is a technique which has been used for many years ago. Now let's see the categories of candlestick pattern. We normally have two categories of candlestick. If you remember, we have learned the prayers of Forex market. We have seen that the category of people which is on the top of radar of Forex trading are the central banks, major banks, big commercial companies, market makers, big commercial companies, retailers, and speculators, which are the speculators like you and me who are running this. Whatever the category you are in, what you are doing, you are either looking to buy the market or you are looking to sell the market. That is what we have. Therefore, that is why we have two candlestick patterns, category of two candlestick pattern. The category number one is what we call bullish candlestick pattern. These are the candlestick which stand for people who are trying to buy the market. The second category, it is what we call bearish candlestick pattern, which are the candlestick which represent the people or the group of traders who are looking to sell, who are selling the market. These are the main categories of candlestick pattern, and you see that they are represented with different colors, and red and green are most used colors. Green for bullish candlestick pattern and the red for bearish candlestick pattern. but you can customize your candlestick anyhow you want, but you have to know that you will always have two candlesticks only in any chart patterns. The candlestick which stands for bullish candlestick patterns and the candlestick which stands for bearish candlestick pattern. There are other traders who use halo candlestick for bullish candle and black candles for bearish candle. You will use any color you want, but these are the colors which are most used. Now let's deep into and why do we call them bearish and bullish? If we take this name, you see that this bullish is simply an adjective. If you cut this word ish, you will see that this is the word bull. And if you cut the ish here, you will see the word bear here. This have been, the bullish candle has been called so depending on the behavior of the bulls. You know, when the bulls are fighting, they want to push something up, which they're fighting with either a person or something else. So therefore, that is why it stands for people, and the buyers, they want, there are people's a group of traders who want to push the market up. That is where the word bullish came from. Therefore, this stands also, if you say bulls, this stands also for buyers, the group of traders who want to push the market up. And for bear in nature, when it's fighting, it wants to push its opponent down. Like the sellers, when you sell a market, you want the market to go deep lower, because that is when you will be able to make the market. Therefore, the word has derived from bearish, like that. Therefore, if you say that you are bear in market, so it means this stands for sellers. I hope you understood well this category of candlestick pattern. Let's now deep into the anatomy of candlestick pattern. In order to give you a brief explanation about the candlestick pattern, if you wanted to learn more about the full details about anatomy of candlestick pattern, you can go to our website. And candlestick pattern has two main parts. Part number one, it is the body and the shadow, and we call also these wicks. Whether a bullish candle or a bearish candle, it will always have this, not always, because sometimes you can see a candlestick without a body, or you can see a candlestick without even a wicks. But these are usually the two main parts of candlestick pattern, and we will see more details about them in upcoming lessons. And candlestick, we recognize the candlestick with four main characteristics. The characteristic number one, it is the open, and for bullish candle, the candle open below, and then the low, which is the lowest price. The price has reached in any particular time. Let's say if it is a day, it is the lowest price which the price has reached during the day. The third characteristic is the highest price the market has reached in the trading sessions. And the last characteristic of candlestick pattern, it is the closing price of any asset in a particular time, for this case, for the day. For a bearish candle, it is the same. It does also have the body here, and it has the wicks or shadow here. And it has the four characteristics: open, high, close, and low. And as you may see, the only difference between bullish candle and bearish candle, it is not the colors, it is the open and the close. For a bullish candle, the market open low and close, and the close and is above the open. For a bearish candle, the market open high and it closes below the open. This is the only difference between bullish and bearish candlestick pattern. Now, why do we need to run this and the candlestick patterns and the anatomy of this candlestick pattern? We are learning them because the candlestick, first of all, will help us to predict the directions of a price and the momentum. This is the things number one things which candlestick pattern is going to help us. It will help us to predict the price direction and the momentum. Let's say, for example, we had a market which was pushing up like this. Let's use a green candle because it is a bullish market. Let's say the price was pushing up like this, and then the market comes back to this resistance, for example, to this resistance which is broken, and let's say you get a big bullish candlestick pattern here, and you get a big bullish candlestick pattern here. This will tells you that the market is willing to continue in the same direction. So if you know the direction of the market it is going on, so it will indicate you, it will tell you that you need to go, you have to buy this market. That is the first thing which the candlestick will help us to know. And the second, it will help us to know the momentum behind this candlestick pattern. This, for example, it is a bullish candle which is Raja, which has a big body like that one, like this one. It is showing a bullish momentum, but it is different to this candle which has the smaller bodies like this one. You see, those candlestick here, they are showing a bullish directions, but in terms of momentum, you can clearly see that there is a big buying pressure or big momentum behind this candlestick compared to this one. Therefore, by knowing the direction of momentum behind any candlestick pattern, we will know what to do in the market. The first things which candlestick will help us to do is the identification of trading patterns, which helps the technical analysis to take trading positions. So here I will also give an example. I know it will be a bit difficult to understand it here, but in the upcoming lessons we will be able to know and to understand this in more details. Let's say, use another example. Let's say the market was pushing up like this, and then it comes back to this broken resistance which can come support. And you find, for example, what we call a hammer here. It is a candlestick of a small body and a very, very strong wick or down shadow. This is one single candlestick pattern. This will tells us that there is a strong buying pressure. We will see this candlestick pattern in the upcoming lessons. Don't forget to subscribe to our YouTube channel so that you will not miss these lessons. And hit the like button and share with your friends and family so that they may know this information also. This, for example, this candlestick pattern, we call it hammer. And it shows that there is a very strong buying pressure and the market it is willing to continue higher. By recognizing these patterns, the meaning and the strength behind it, it will help us to determine whether we buy or sell. For this case, we will buy this market and it will likely get profit from this trading because this is a high probability trading setup. More will be known in the upcoming lesson. So these are the two main things which candlestick pattern will help us will help us to determine the direction of the price and the momentum behind it, and will help also to make a decision, to make the trading decision where we buy or sell or stay away of the market. So let's close the lesson of today here about candlestick patterns, and we invite you to subscribe to our YouTube channel so that you will not miss the following the next lesson about the candlestick, where we will teach you the candlestick patterns, how to read the candlestick pattern, the type of candlestick pattern, and how to read them. And you can get more information about our YouTube channel, www.ultimatetraders.rw. And if you have any comment, or if you have not understood anything, please comment below. We'll be glad to help you. May God be with you.